All right, let's talk about nonprofit organizations. This one will go a lot faster because now it's very similar to the other. The pro tip here is running a nonprofit, even running a church from a financial standpoint. It's very similar to running a business. The main differences revolve around what you do with the profit. What do you do with the gains that you make? Now remember, what we said about the business is at the end, you want that fifth account to be full so that it can buy assets to set up your family. Proverbs talks about houses being inherited from parents and wealth being set aside for future generations. So really, that's what we're trying to do with that business is flow the money in that direction. With the nonprofit, with church, with the ministry, it's going to be a little bit different. Now, let me give you a little bit more information. If you are familiar with 5 systems that we talk about for ministries and churches, you've looked up at the Gear Up resources. That's a whole other course we have. This is all going to fit and show you how to run the money that we talk about in gear number 5 right there, the purse. If you are familiar with grant making machine, this is how you're going to run the money that you get from all of those grants. The links to all these courses are down below as well. If you are looking at some of the resources through the Healthy Church resource from Life Lift Ministries, that has the 5 systems that you need to set in order. One of those systems is the purse. That's the finances. This is the video. This is the training that tells you how to run all of that. Okay. Remember this, the profit, meaning the gain. And I wrote it down right here. Yes, 501c3 entities, even churches, even though as a church, you don't have to get the 501c3, you can be recognized by the IRS and by your state just by functioning, should gain money each month. The profit, though, doesn't go to shareholders. It rolls back into ministry. So as a result, nonprofits complete different tax forms. They have a different set of rules and legalities, but we're going to run it much the same on the financial side. Now, a couple notes right here. Most of the time, 4 accounts will be sufficient. We don't need 5. We don't need that 4th account that we talked about in the previous part of this training. We don't need that business tax account unless we're running a for-profit business to support the nonprofit. We'll highlight it right there. Such as a thrift store. Years ago, I was running a nonprofit and we opened up a thrift store that kind of became a cash machine to fund the nonprofit. It relieved a lot of stress from the nonprofit. Now we had to pay taxes from that thrift store. Why? Because it was a for-profit business, and what it existed to do was get money down into that investment account and dump it every single month into the nonprofit. So if you are, let me just say it this way, if you are, second paragraph, if you are running a business to support the nonprofit, if you're running a thrift store, if you're running a car wash, if you're running any other thing to support that nonprofit, okay, you got to keep it separated. Okay, you need to run the business in line with its 5 account strategy. It needs a separate EIN. It needs a separate LLC. And again, at the bottom of that, I would say instead of having a business investment account, you just have a ministry investment account. So again, just using the example, when we were running the nonprofit and we had the thrift store, all that money is coming into the operating account. We're paying salaries out of that account, personal salaries for everybody. It's leaving, through a payroll company. So multiple number 2 lines right there going out, all over the place. Number 3, we did set up money that had a runway to keep that business running, because we didn't want that business to hit a hard time or a lean time, and then it can't continue running and continue funding the ministry. So number 4, we did have a number 4 account there that was the business tax account because we had to pay taxes. Number 5 is, instead of having a business investment account that bought assets, the asset was funding the nonprofit. So it was investing into ministry, not investing into assets for other shares. So that's the difference right there in what you need to do. Don't shortcut the accounts in any way whatsoever, regardless, because the business must remain healthy in order to become a funding machine for that ministry, or you can tank both. Okay, so again, look at all the highlights that are on this page if that situation describes you. If you are a ministry that has a business that also funds the ministry, you got to keep them separated. But now you know, and now you can continue going forward. Again, just remember, don't shortcut any of it. Now, here's a common question that we get about the business and about the nonprofit stuff that we're about to roll into. Can I change the rules of how I do this? I would say you can. In fact, years ago, I was working at a shoe department, and you go to the stock room. Stock room is, oh goodness, 3 times the size of the show floor. And you go to the stock room, and they're all separated by colors. You know, all the brown shoes in one area, all the black shoes in one area, all the shoes that are athletic shoes in one area. And I remember the first time that the manager was walking me through the stock room, kind of giving me the tour and explaining all of it. He said something like this. Still remember the quote: "Rules are for fools, guidelines for the rest of us." Rules are for fools, guidelines are for the rest of us. And what he meant was, in the shoe department world, there were too many variables. What do you do if you got a shoe that's black, but it has a lot of brown on it? What do you do if it's like one of those fancy wingtips? It's a Spectator, it's white and black. Does that go with the white shoes or the black shoes? And he would just say, rules are for fools. Like the rule doesn't always fit. Guidelines. He was saying this: a lot of the stuff you get into is part art and part science. So it's part subjective, it's part objective. What we like to do is tend to go, well, there's a little bit of an exceptional mind, so the whole thing's an exception. And he would say, no, that's not the case. Objectively, it's more true than it's untrue. So a lot of times we're talking about ministry stuff, particularly. Most people that we're advising assume like they're the massive exception to the rule, like this won't work for them. And you go, wait, no, hold on. It will work. You have more in line than out of line with just kind of the objective play that we're saying to run. So yes, it's part science and you need to follow the steps, and it's part art, like these characters right here on the screen. And you do need to determine what works in your context, because your situation, I get it, is unique in some way. But, and you always know there's something coming when somebody says, but, don't assume it won't work for you until you try it as it's written. So run the play first before you adapt the play. Years ago, I was working at a church, and the guy had a phenomenal worship ministry, phenomenal worship leader, incredible musicians. And so what he would do, he would give them a CD of the song that they were going to learn to play for, worship services. And when they would come in every Tuesday and they would practice, and inevitably guys would come in there and they would just go off on these crazy riffs, or they would play a unique drum beat, or they would, sing it in a different way. And he would say, no. Like at some point, you're going to be able to express yourself artistically. And that's what they all want to do. Oh, I really want to express myself. Like this is my act. They would even spiritualize it in a good way. This is my act of worship. I want it to be me. I don't want it to be what's on the CD. And he'd say, I know you do, and you'll get to, but you got to play it as it's written first. And I got to know that you can do it like it's done and said to be done before we improvise. And so the guys who were the best guys and gals would always go, yeah, that makes sense. And so they would do it. And then, after they could show that they could do it as it was supposed to be done, he would let them improvise. And so what I'm saying to you on this side, yes, you got a unique ministry. Yes, there are some things that are specifically you. At the same time, Do it like it's written first. Okay. That's it. Same outline right here. We're going to go through what accounts do we need. That's number one. And we're going to talk about how do we use those accounts. And then number three, we'll make an observation. All right. So number one of three, 4 accounts you need if you're running a nonprofit. You don't need 5. You just need 4. Here's the 4 that you need if you're running a nonprofit. Now, I know you've seen the screen before because it's the same thing that we had with the business. The only thing I've done is I've just X'd out number 4, the business tax account, but I've left it there to where you could see exactly the play that we're running. So number one, you need a business operating account. Number 2, you need your personal checking account. Do not mix your personal money with the ministry money at all. Like just don't even do it. Number 3, you need a business savings account. We want to put money in that to build up 6 months of operating expenses. Number 4, don't need that. Don't need the tax account because nonprofit doesn't have to pay taxes as long as you stay in line and do all the forms and do what you're supposed to do. Number 5, business investment account. Yes, I think we should do that. Now, by comparison, here's the accounts we needed for a business. You see, the only difference is we have X'd off for the nonprofit. We have X'd off that tax account. Okay. Number 2 of 3, let's talk about how do we use these accounts. And let me just add this on the screen there. In the nonprofit ministry or even church world, here's how to use them in all of those spaces. Okay, number 1, business operating account. All the money for your organization. This is the same script we did above. It all flows in and out of this account. So that includes grants, that includes donations. It might include some swag unless you've got a store that's run as a business that funds the nonprofit, which means, as we talked about above, you need to keep that completely separated and to let the money flow down. As is the case with the business, you must not mix personal money, personal bills, or your personal credit card. In fact, I would even say, let's talk about this one, personal credit card. My experience has been a lot of times it's not even shady when people do that. They're just legitimately getting started, and in the beginning, you go, well, I'm going on this trip for the ministry, or I'm having this this get together for board members of the ministry, or I'm making these purchases of resources we need for the ministry. And so early on, you even put it on your personal credit card, and then you write a check out of the business operating account to your personal credit card. And it kind of, you got to think 3, 4 years, 5 years down the road, what's it going to look like when this business is writing you all kinds of money? Oh, and then it's all kinds of money. And if you keep doing that every month, all of a sudden it looks like your income's higher. And now the IRS is wondering, well, man, are you really making, let's just make up a number. Are you making $5,000 a month, or are you making $7,000 or $8,000 a month? And if you think about it, you could be putting thousands of dollars every month on a personal credit card if you're running a ministry, very well intended. And it will look like, through your bank account, it will look like on paper, unless somebody gets into the weeds of it, it will look like it's income, or that the ministry is just giving you money for some random reason. So early on, keep this separated. In fact, I would even say right here, let's just put this as let's just make a pro tip. So I'm recording this in real time. I would just say pro tip. Do all of the expenses on business debit cards and business credit cards, not personal cards that get reimbursed. Here's Here's what I'll say. If you do it that way, it will actually save you paperwork too. I went on a trip with a nonprofit earlier. It was the end of last year, actually, and they were reimbursing me. But by the time it was done, man, it was not in a massive amount. It was about $1,500 that I had on my personal credit card that I had to be reimbursed for. 2 months before that, I'd gone on another trip. I had about $1,800, $2,000 on personal accounts, credit cards that had to be reimbursed for. Here's what that meant. It meant that not only did it look like income coming into my account that was not income, it was just being reimbursed. It meant that I had to do paperwork to submit to the ministry for all of those receipts and expenses. And then they had to do paperwork to back up why they gave me money. So it was like double paperwork. Whereas if I, as a trusted employee or contractor for that ministry, had access in that moment to business funds, they would be business funds, then we could have done the paperwork one time and there's no questions asked. It just comes out of the business and everybody understands exactly what it's for. It doesn't look like income for me. I'm not out money. I'm not stretching my credit card, all that kind of stuff. It's just cleaner, cleaner, cleaner. So, pro tip, do all of the expenses on business debit cards and business credit cards. You don't have to get a credit card, but you got to do it, not personal stuff that gets reimbursed. And let's just add this. It's cleaner for bookkeeping. It looks better for appearances. And it's actually easier. It's not double work. So I'm going to put that right there in real time as a pro tip. Now, big question that comes up all the time is, if I have a nonprofit or a church, is it a business operating account? And yes, business is a kind of account that you get at the bank. It's if you go to the bank, it's either going to be a business account or a personal account. There's not like a ministry designation of bank account. So it's really personal accounts and organization accounts. So that's the difference here. A couple other notes about the business operating account. Even in a ministry, your salary needs to be accounted for in this budget, or if you are a contract employee, needs to be accounted for in this budget. Again, suggestion here, use a payroll company. I'm just going to highlight that in bold print right there in a different color. Use a payroll company for this, because that's going to make it a lot easier when you start doing filings and you start doing tax stuff and you start doing every other thing that is required that you do. Make sure, okay, and this will all appear in the budget. It'll keep the lines clean. It'll keep everything in order. Now, nonprofits, bottom paragraph. Nonprofits do not pay taxes on their revenue in the same way businesses and for-profit entities do. But nonprofits, ministries, churches still handle payroll taxes. So again, use a payroll company to do it. They'll withhold the taxes. They'll pay them. Your deductions will be in line. They'll pay the employer side of the FICA, of the taxes, of all the other stuff. It'll be budgeted, and it will be one line item that goes out on the budget, and it will be super easy, and they will do all of the stuff. All right. That's account number one. Account number two here, personal checking account. Now, I'm saying it again right here. Technically, that is not owned by the nonprofit, but you do want to keep your personal assets, your personal funds separate from the ministry side. So technically, if you were looking up here and say, well, are there 4 accounts I need for a nonprofit? Well, the nonprofit needs 3 accounts, but I'm saying 4 because you got to have an account that is separate from all of this other stuff. You definitely don't want to be mixing personal funds and organization funds. Just don't do it. You got to keep them separated. Number 3, business savings account. All right, the business savings account. Here's what we want to do. When the operating account has enough to cover the bills for a full month before the month begins, meaning, let's just use another date. On May 1st, we already have all the money needed to operate all of May before any donations come in, before any grants are awarded. We want to send the overage of that amount here. So what are we going to do? We're going to build that back up to $15,000. So we got it for the next month, right? And then anything over that, just start rolling that stuff into this account. So let's just use the same numbers that we use in the business example. Let's say it requires $15,000 a month to run the ministry, to run the nonprofit, and that includes your salary. It includes all the contract workers that you might have. It includes all the budgeted expenses for software and for meetings and for resources and whatever it is that you do to make an impact on the world. When your operating account consistently has the full $15,000 at the beginning of the first of the month, before any donations come in, before any grants are awarded, before anything else occurs, start putting the overage, meaning anything after $15,000 that you get for the month, because you want to get that $15,000 for the next month. Anything over that, start rolling it into this account. So all month you're building back up for the next month. Anything after you cover the following month's expenses, move it from the operating account into this account. Here's what it looks like. Let's say $25,000 in revenue rolls in during that month. You keep $15,000 in the operating account. Let's just type that right here. That would be a really clean way to say it. So we keep $15,000 in the operating account for the next month. So that means we're going to have the money for the next month at the beginning of that month, meaning we start the whole month with a full tank of gas, and we place whatever overage into this business savings account right here. Now remember, this is different advice than we gave the for-profit entities. They've got to put a healthy money amount in the tax account. As a ministry, you don't have to do that. So this account has the capacity to grow much faster. The goal for this account is this. We want to create a holding tank of 6 months of operating expenses, just like we were doing with the business. So again, there's not a lot of difference in how we're running these two types of organizations. If we use the same numbers above, that means if it requires $15,000 to run the nonprofit every single month, we want to amass $90,000 in this account, meaning $15,000 a month times 6 months. You just do the math right there, pull out your iPhone and your calculator, even on the Apple Watch, it'll come out to $90,000. And that's it. We want to get 6 months of runway in that account. Now, here's a common question that comes up. People say, well, why would I just not send all of the money into the investment account below, which again, we've got that fifth account, which, in ministry, it's only the fourth account because we can eliminate account number 4. We don't have the taxes. Why not just send it all? Here's why. We want to run the nonprofit like a business. We don't ever want to get to the point where we're cash poor. In ministry, it doesn't take long doing it until you realize, oh man, there's some lean months. Oh, there's also some months where you have unexpected expenses come up. Oh, there's also you fill in all the variables. We don't want to run the ministry in fear. We also don't want to overextend the ministry and then just assume because we've got 6 months of operating capital that, oh, we can just go hire a bunch of people, and then we want to budget all of that and be very intentional about what we're doing. So that's why. Now, ultimately, yes, we're going to not have a business tax account. So we knock that thing off the list. I'm just showing it here so you know it's there. We are going to have a business investment account. Now, this might be a money market. It could be something else which offers a better yield than just checking. In fact, I would suggest that the business savings account is probably a money market where you've got access to it. You want to tie the money up into a CD or something where you can't get it. But as is the case with a for-profit business, if we invest here in number 5 at 5 to 7%, but only after we have the other margins, we really set up our place and position to do some incredible things, meaning we could, instead of buying Bass boats or Mini Coopers or whatever nonsense I used in the example up above, that would be great toys and tools, right? They're just not assets. It might be, hey, we set this aside and say, okay, we're going to earn interest on this and we're going to send it to other ministries that we believe in. So we're going to help fund mission trips or fund equipping pastors in Nepal or in Honduras or wherever it is. And we're going to do it off the interest and let that thing continue to grow. So we don't just fund them one year. Like, we fund them off the interest. We can do it every single year from now until Jesus comes back. Oh, and by the way, we can use the other money for some other things and expand the scope of what the ministry can do so that the money is actually working for us and we're leveraging it rather than always chasing it. So again, plain talk. What if, instead of just giving $50,000 to $70,000, that's a lot of money to fund missions overseas and paying for it for money we had to raise, what if we funded it from the interest of a business investment account that the ministry had, one which replenishes every single year that we could continue adding to? Or to say it another way, what if, we give from income, but also let's see what can happen if we, in addition to that, we contribute from wealth. Well, here's the elephant in the room. Inevitably, you start dialoguing about this, and somebody says, well, isn't this just an example of building bigger barns, a la Luke 12, 16 through 21? You probably know that story. Jesus spoke a parable saying, by the way, the setup on this is he's speaking to people who have the idea of money completely wrong. They're using it as kind of their measure of each other, not using it as a tool. So he says this parable: the ground of a certain rich man yielded plentifully. The rich man then thought to himself, saying, what should I do since I have no room to store my crops? Which is crazy anyway, because crops eventually go bad. So he said, I'll do this. I'll pull down my barns, I'll build greater, and there I'll store all my crops and goods. And I will say to my soul, you have many goods laid up for many years. Take your ease, eat, drink, and be merry. That's where that phrase comes from. But God said to him, you fool, this night your soul will be required of you. And then who will those things be which you have provided? The answer is not you. So it's he who lays up treasure for himself and is not rich towards God. Okay, a couple things about that. Observations. The man trusted in himself, and it was all for himself. I think that's a big issue right there. Jesus, second point on the screen, didn't diminish planning and preparation. He said, if you go back to it and look at the last line there, so is he who lays up treasure for himself and is not rich towards God. Jesus wasn't diminishing planning and preparation. He was saying we shouldn't do this without also being rich towards God. There are so many verses. I was reading through the book of Proverbs this morning that talk about saving, storing, setting stuff aside, building it up bit by bit, and amassing wealth to even pass down to other generations. You got to remember, Joseph was guided by God and given the vision of, ironically, building bigger barns. And as a result, he saved Egypt and Israel in Genesis chapter 41. So the key here is, what's the heart motivation? Not necessarily the action. The same action done from one angle is awesome. Done from another perspective, it's absolutely devastating. And so that is the difference here. What you want to do after you have all of this is you want to just work the process. So it's again, it's very similar to the for-profit side. Okay, the strategy takes time, yes, but catch a vision again. What can happen if you do this and if you think long term rather than just trying to get the bills paid from month to month to month to month to month and not really having a strategy for how we're using the bank accounts to manage the money and telling the money where to go and using it as a tool, us telling it what to do rather than stressing about those resources. As we close out, I do want to quickly go through 4 common threads that we've seen between both the for-profit and the nonprofit side. As a reminder, notice these. We're using the same accounts on all of these, except for that nonprofit side does not have account number 1 for the business tax account. They all have number 1, the operating account. They all have number 2, your checking account, which is not owned by the business or the nonprofit, has got to be completely separate. They all have a savings account. That's kind of that 6 months worth of runway. They all have an investment account that we're using to think about long-term strategy and really do something awesome with. Okay, so that's similar. Here's common threads they have. I'm going to give you 4. Number 1, and actually, that should have been number 1. So let's just change that, and let's just make this. Let's make this number 1. Same types of accounts. So how's that? And let's go right here. Let's just do 5 common threads between all of them. Okay, so same types of accounts. So here it is. Now this is number 2. You got to make a budget and you got to stick with it. The budget is you making a plan on paper and telling the finances what you intend to do with them as they come in. It is one of the keys that's going to remove the stress and you're going to manage it so much better. Now, I'll tell you this, especially in the early days, I've never been in a ministry or a business that the budget at the end of the year looked exactly like it did at the beginning of the year. When you're new, those things tend to grow and they tend to adapt. And so you just adapt and adjust as you need to, but you don't make haphazard decisions. You make intentional decisions. So the budget, it needs to be approved by your board of directors or your owners. It needs to be the plan you run. And remember, you can always adjust it, but it is easier to adjust something that's written. You can't edit something that's not written down. But when it's written down, oh my goodness, then you can have some freedom and you'll probably make some better decisions, even in the editing process. Here's common thread number 3 is we've talked about the bank accounts and what they are. The bank accounts can help you keep everything straight and organized. If you use them in the right way, and if you keep them separate, the bank accounts can help you keep things straight because by placing the resources where they go, you ensure they are there when they're needed for the intended purpose. No tax bill takes you by surprise. No slow month knocks you sideways. No unexpected expense puts everything into a grind to where, oh, are we going to make payroll this month? Or what are we going to do about it just sets some things at ease. It also sets it at ease for you if you've got partner ministries, if you are a nonprofit and something unexpected happens to them, or if they're overseas and something happens in their country, all of a sudden, because you've got reserves, you're there because of your prior planning way ahead of time in God's providence, you've got what you need to meet the need that they have. So by placing it and using the bank accounts, whether it's a business or a nonprofit, it does help you stay organized. And you're not having to look at the bank accounts going, well, what can we make this decision or not? I don't know if we have enough money set aside for taxes, or I don't want to be surprised by that. No, absolutely. You can tell whether you have it or not because you know. Common thread, and this is going to be number 4. Common thread. You need to bring professionals into the mix regardless of what kind of organization that you are. So if you are a church, bring professionals in, get a CPA. If you are a business, get a CPA. If you are a ministry, get a payroll company. If you are a solopreneur, get a payroll company. If you wouldn't trust yourself or go, I don't even want to take the time to change the toilet in your house if the toilet went out and you'd call a plumber, man, I'm telling you, like, why would you take the time to try to figure all this stuff out? Get somebody else to do it. It doesn't cost that much, and it will enable you to focus more freely on the good work that you really feel called to do, that you're awesome at. So let CPAs handle your filings. Let CPAs advise you. Let them make sure you stay on track. Use a payroll company unless you are a solopreneur running a business, can have the CPA help you with quarterly payments to the IRS. That would be if you're taking like contract work payments or something. And I would even say right there, man, I might even go ahead and get the payroll company doing this. Regardless, don't change the amounts. Let me just highlight this. Do not change the amounts that you're going to use for everything that you got going on in that world of tax accounts and liabilities. Do not change them without building enough, there to pay for next year's taxes at the same rate, and without getting your CPAs, bookkeepers, advice. And this is why it needs to be a third party. It needs to be somebody outside of you who is emotionally detached from it that can actually give you incredible advice. Using professionals will remove a lot of the stress from you, as we'll use these separate bank accounts, and it will remove a lot of the legal liability from you, and it will place it on them. And they're used to it. They're happy to have it. In the same way, you're happy to speak on stage and take that burden, even though like it's the number 2 fear of people in the world. I think death is number 1. And some people actually say it's the opposite, that speaking in public is fear number 1 and death's number 2. Whatever. In the same way you're willing to take that burden, these people are glad to take a little bit of your money for a lot of the burden. So place it on them. And then the common thread with both of these is, I would say, number 5, you need to begin now with the end in mind. Or to say it another way, you need to, as Proverbs says, start building it like the ant. Okay, Proverbs 30, 4 things on earth are small, yet these small things are extremely wise. Ants are creatures of little strength, yet they store up their food in the summer. They stock it away for when they need it. Okay, according to the size of an ant and their lifespan, I mean, this is like you and me storing up for years at a time. So don't be overwhelmed by storing up for 6 months. I mean, goodness, ants are stored up for 9 months, right? Hyraxes are creatures of little power, yet they make their home in the crags. Locusts have no king, yet they advance together in ranks. A lizard can be caught with the hand, yet it's found in kings' palaces. Be like these little things and do awesome big work. A note for you, it's easy, especially in the beginning. It is super easy to get overwhelmed by how far you want to go, by how many things you've got left to do, by where you are. But remember this, the time is going to pass anyway. Whether or not you choose to do something intentionally with the time or just kind of let stuff just happen to fall in place wherever it falls, that's completely up to you. The time passes regardless of how you choose to use it. So, my suggestion is to make the most of it, leverage the time while you do the amazing work that you are called to do, whether that's in business, whether that's in a nonprofit, whether it's in a church, whether it's in a ministry. A module to review, if you want to go for further study, is this: building a business plan to grow. There is a link. If you're watching this in Amplify Pro or as part of a course, there is a link down below to that. Okay, here's a review. Here's what you now know. You know how for-profit organizations, meaning businesses, should manage the money. You know how nonprofits, ministries, and churches modify the exact same play to steward their resources. And you also know At the same time, the 5 common threads between both of these, again, the outcome is the same. The result is we want you to be able to focus on the mission, to stress less about the money. All right, comments, questions? Anything else? Contact information for me is below. Would love to get your questions. Would love to take a conversation with you farther.